What's up everyone, it's Kadi with Money Investing. In this video, we are going to be talking about Tesla's deliveries. So delivery numbers came out for Tesla and it was a beat, so a very strong beat. I'm going to break down exactly what the number was and then also compare them to year-over-year and quarter-over-quarter and what the expectations might be for Tesla in terms of earnings per share. Because at the end of the day, the delivery numbers are pretty much a signal or an indicator for what the earnings are going to look like for when Tesla actually reports their numbers. And I'm also going to go over the technicals and what to expect after these numbers have already come out. So I hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us. And of course, getting access to all the buy and sell alerts, options alerts, trade ideas, links are going to be down below if you're interested in joining. So first things first, let's just quickly talk about Tesla's deliveries. And we came in at 422,875 cars worldwide in the first quarter. Production number was just a little bit over 440,000. They were both a record numbers, record quarter for Tesla, both in terms of production and in terms of deliveries as well. So Tesla deliveries set a new record at over 422,000, almost 900 vehicles. So this right here is a nice chart put together by Piloli on Twitter, shout out to them. And what they've really done is that they've kind of broken it down between first, second, third, and fourth quarter. And you'll notice that the green is the first quarter of every single year. 2019, 63,000, then growing to 88,000, then 185,000, then 310,000, and now to over 423,000. So very nice. That's a 36% growth year over year. And the goal this year really is going to be all the way up to 1.8 to 2 million vehicles per year. I mean, Elon Musk himself has pretty much mentioned that, if any of the geopolitical tensions don't end up having, we pretty much are not, kind of working with any external problems, so to speak, any political problems, then it's possible that Tesla can do close to 2 million vehicles. He said that. And, bottom line is that they need to at least hit 1.8 million, because last year, if you take a look, they were just shy of 1.3 million, if I'm not mistaken. So 405, 749, 750. That's it's million, 1.3. So 1.3 million was that number. And if they were to grow, let's say by 50%, so 1.3 times 1.5, we're looking at just a little bit under 2 million vehicles. If they grow by 40%, we're looking at least 1.8 million vehicle deliveries for 2023. If we annualize this number, if we take 423,000 and if we annualize this number, multiply by 4, we're just shy of 1.7 million vehicles. So this number certainly needs to get ramped up a little bit, and first quarter usually is their shortest quarter. In fact, actually second quarter looks like is also a little bit of a pullback quarter for the company. They don't necessarily do super well, but of course the big selling quarters are Q3 and Q4 for Tesla. And this demand, I mean, it can also be regarded with all the price cuts that Tesla's been doing. We've been talking about this. I mean, Tesla's obviously been cutting a lot of prices for a lot of its vehicles. And as a result, they've been able to boost demand after fourth quarter deliveries disappointed investors. So it's really going to come down to margins and what those numbers look like. Now, in terms of average selling price, Tesla's already mentioned that, they've generally been on a downtrend trajectory for many years, improving affordability if necessary to become a multi-million vehicle producer. While ASPs halved between 2017 and 2022, our operating margins have consistently improved. So what Tesla is really saying there is that even though we are cutting prices and we are making affordability a big thing among all people that want to own Teslas, our margins are still pretty consistently going higher. So that's a good thing. And you can see that Tesla's own chart pretty much represents that operating margins are improving, even though Tesla's average selling price is coming down. At one point, it was over 100,000, so it was considered as a luxury vehicle. And now it's been pretty much settled at around $50,000 to $55,000, so a little bit under $60,000. But with these price cuts, again, my guess is that the average selling price is going to come down for Tesla. Again, we're going to find out when they actually report earnings. So these are some of the numbers that I wanted to kind of go over. This is first quarter 2022. We got deliveries, automotive revenue, non-GAAP earnings, margins, shares outstanding, EPS, and average selling price. This is going to be for the last quarter, so fourth quarter. And this is the delivery numbers for today that they actually released. And I've also got all the estimates of what that's going to translate over to in terms of revenue and earnings and margins and all those things. So when it comes to average selling price in first quarter 22, it was a little bit over $54,000, but then last quarter in Q4 we saw that number come down to $52,000, right? So $50,500 to be precise. Simply taking into account the deliveries and then dividing it by the automotive revenue, or in other words, the automotive revenue divided by deliveries to kind of figure out what that average selling price for Tesla is. And it was sitting at $52,500. Kind of average those two numbers out. It's going to be a little bit over $50,000, $55,000. Again, I think Q3 and Q2 were a little bit higher, and as a result, we were sitting right there. But again, as Tesla's already mentioned, that as years go by, their average selling price is going to come down because, again, they want these vehicles to be more affordable to everybody. So I'm guessing that the average selling price in the first quarter this is expectations based on the price cuts, right? So my estimate would be that we pretty much saw average selling price come down to under $50,000 for the first time. It's possible that it is going to be somewhere around that level, 50,000, maybe 51, 49, 51,000, like in and around those levels. I think it's possible that we end up seeing average selling price in and around those levels. And if you simply take the deliveries and multiply with the ASP, we get an estimated automotive revenue of $21 billion, $21.1 billion, which on a quarter-over-quarter basis might flatline. So it's not really going to be much growth, but year over year, of course, it's going to be a little bit over 25%. And then non-GAAP earnings, considering about a same 19.5, closer to 20% margin, expecting about $4.1 billion. And then shares outstanding is going to stay flat. And this is going to be shares adjusted. So split adjusted, meaning that, we had a 3-for-1 split back in September. If I don't account for it, then of course we had an non-GAAP EPS of $3.23. But if you adjust for the split, it was $1.08 per share. And then, of course, shares outstanding sitting at $3.4 billion, which gets us to an EPS of about $1.19 if we get to a non-GAAP earnings of a little bit over $4.1 billion, considering the average selling price, which is not going to be a lot of growth on a year-over-year basis for the earnings, a little bit over 10%. And that's primarily because even though the deliveries are growing, the bottom line, as it trickles all the way down with margins and everything, that's the real question, right? I mean, if Tesla's cutting prices, how is that affecting margins? Are margins able to expand, or if margins are relatively flat or down for Tesla? That's going to be the real question. In other words, is the demand coming in for Tesla based on the actual demand because of the vehicles are very good in terms of quality and everything else, or is it because the prices were lower and thereby demand is coming back in and Tesla's not able to maintain those margins? That's going to be the real question that I think investors are going to, really want to learn about when the earnings are released. So that's going to be the entire estimate. And in terms of the price action itself, I mean, Tesla has been rallying quite a bit. I mean, you'll notice that, last week was very, very strong. In fact, we were up, I think, double digits, almost double digits. So it was up close to 9%, and we're getting up to a resistance, right? So we're now approaching a very interesting area of resistance here for Tesla, sitting roughly in the 215 to as much as 225 level. So that is going to be a very, very important level of resistance to watch for the company. And, previously we have gone rejected at that level. So you'll notice that we got rejected here at 223, and this right here previously acting as a support for Tesla as well. So when it comes to earnings estimate, EPS estimate is pegged at 85 cents according to TradingView. And revenue estimate is $23.6 billion, which is actually, if you notice, very much in line with what I have. Again, this is actually not accounting for other revenue. This is only automotive revenue. So once you account for energy and everything else that Tesla has, it's possible that revenue gets up to a little bit over 23 billion. But EPS, right? EPS, I'm expecting $1.19, which might be a little bit on the optimistic side. But TradingView has us pegged at 85 cents. But let's just quickly take a look at what Seeking Alpha also has in terms of their earnings, right? So I'm going to bring this over for us so we can take a look on the earnings per share. So we're going to talk about this here. We're going to go to Seeking Alpha. And I'm just going to quickly go over what the EPS estimates are for Tesla for this upcoming quarter, because earnings season are just getting started, right? So we're going to get a lot of companies reporting earnings here very soon. So earnings, okay, so EPS on a GAAP basis, they're expecting $1.61 on revenue of oh no, this is a different company. I was like, what? Tesla? This is something else, Tenorus. All right, let's just go over here. Okay, there we go. So $23.4 billion and about a 75 cents in EPS per share for the company. So that's going to be the expectation right now for first quarter 23, which, compared to first quarter 22, it's not going to be a lot of growth. According to my estimates, a little bit over 10, maybe 12% growth for the company. So let me know down in the comment section below, what do you think about Tesla's upcoming earnings and how this is going to translate over to earnings. Let me know if you think the margins are going to come down or not. That's the big question. And Tesla resistance stays put at 220 to 225. Big resistance, big supply zone there. If you get a big breakout above this level, next target is going to be 260s for Tesla. But on this delivery report, I would say it's a good report. I would give Tesla 7 out of 10. Beat. But again, the real question really is the margins and what that earnings are going to look like. So hope you guys enjoyed this video. Find it helpful. If you did, make sure that you drop a like, subscribe to the channel. As always, happy investing. I'll see you all in the next video.